Hello, fellow Ghost Traders. It's time for the weekly update. Last week, the Dow rose 1.8%. The S&P 500 advanced about 1.9%, and the NASDAQ Composite added 2%. A rally that helped reverse a bearish February. Additionally, as a bullish signal, the VIX is back under 20, which is about 18.5, as the markets continue their rise. S&P daily just broke above the 20-day simple moving average and the 4068 resistance, so it may stay here for a bit. The market is facing its third and really crucial week of this short rally this week. It faces a critical test with the jobs report due out this week and anticipated comments by the chairman of Fed, Jerome Powell, for the biannual congressional testimony. Investors believe that a good job report, which it is estimated to add 225,000 jobs, could trigger a more aggressive response by the Federal Reserve in their attempts to stifle growing inflationary concerns. Currently, it's anticipated another 25 basis point hike, and Powell is expected to discuss more rate hikes, not fewer, within the goal of about a 6% interest. The Reserve thinks that this is necessary to get back to their target of about 2% annual inflation. The 10-year Treasury note topped 4% with the possibility of more upward movement towards 5%, providing a really tempting alternative to investors that are wary of the current market conditions. This will likely pull money from the markets and into the Treasury. Globally, China set growth targets at an aggressive 5% clip, which saw their stocks slipped after their announcement. In Europe, UK stocks are at a record 40% discount against US markets, calling for efforts to realize higher values for shareholders. At present, all options are being discussed and are on the table. Look for Apple, Tesla, Merck, Ferrari, and Nvidia to be big movers this week. For example, we've got Tesla right here and Apple. So Apple right here, expected to have some big movements. Tesla has a gap to close here, as well as Nvidia. Look for further scrutiny in the world of SaaS as subscribers continue to jump ship from platforms like Salesforce and its competitors. In fact, Salesforce had a good earnings. They had a big jump. Look for that potentially gap close over the coming weeks. While this might not have a terribly short-term effect except for the gap close on the performance of the stock, it certainly will have fundamental implications in the event that you have a long position to consider. Also, taking a look at Meta for just a minute. Meta gapped up dramatically several weeks ago, right here as we can see. Let me go ahead and move myself off the way here. We can see we had a nice big gap. We all can see that Meta has been attempting to close that gap over the coming weeks, and I expect that to still potentially be the case. It pumped up on Friday, but it's getting pretty heavy, had a down day today, and I see that a big chance of it filling that gap in the near future. So watch for continued volatility and uncertainty in the markets. I know this is starting to sound a bit like a broken record as we continue with our market guidance, but I see no end to this trend of volatility in the short or midterm. Keep your trades tight and your portfolio balanced. Sell short-term options against movement. Exercise sound technicals and reduce your risk across indexes and ETFs. Have a great week and go out there and make today your masterpiece. Till next time.